the average person does not understand all the jargon. The average person is not super analytical. They don't really want to see tons of graphs and charts and data and all this kind of stuff that we love to show them. So we got to keep that in mind with our presentation and walk them through big picture, always keeping in mind that we want to reach them at their level, because if we talk over their heads, we might think we sound smart, but if they feel stupid, they won't want to invest with us.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 363. One of the greatest challenges real estate investors face as they scale their portfolio is raising capital, specifically raising equity from friends and family in order to get more and bigger deals done. There's a lot of pitfalls and a lot of mistakes that can be made when you first set out to raise money. And that's why you're going to benefit from my conversation with today's guest. Dave Dubeau works with mom and pop real estate investors to create marketing plans that successfully raise capital. He's the host of the new podcast, the How to Raise Capital 101 show. Dave, welcome to the show.
Brian, it's a real pleasure to be here. Thanks for having me.
Tell us a little bit about yourself and how it is you came to be an expert on raising capital.
Well, by utter failure and miserable lack of success at the beginning of my process. That's how I got much better at it. So yeah, thanks, Brian. I got started in real estate investing back in 2003. I saw one of those late night infomercials. You too can get rich in real estate with little or no money down. I said, perfect, because that's what I had at the time, little or no money. So I sent away for the course and did 18 deals in 18 months, creative, low money, no money down type deals. Took a little bit of time off of real estate investing, got back into it around 2009, 2010. Was doing a different strategy that actually involved coming up with money for down payments. And like most people, I self-financed my first couple of single-family homes, had the credit, had the down payment for those, and then, bam, I hit that wall, ran out of cash, ran out of credit, and that's when I started looking at other people's money, OPM. How can I raise private capital? And I was completely clueless, Brian. I'd heard the gurus out there say this thing, hey, just find a good deal and the money will find you, the secret type thing or whatever, right? But I knew I was going to have to do something. So I'd also heard other people say, if you really need to raise money fast, pick up the phone and start calling people. Start cold calling, dialing for dollars. And around that time is when I think The Wolf of Wall Street came out and Leonardo DiCaprio made it look like a lot of fun, calling people up and selling stuff over the phone. So I tried that and I failed miserably. Called, got rejected. I'd love to say I just grinded it out and got good at it and raised millions through cold calling, but I didn't. I couldn't handle that much rejection. So I quit doing that. And here was the challenge. I had a deal on the go. I had a deal under contract, needed to raise $85,000 lickety split for that deal. I think I had 2 weeks to come up with the money for the down payment. So that was my first kick of the can. Let's try calling people up. So when that didn't work, then I switched my focus. And I remember other gurus saying, hey, if you want to raise money, go out and network and talk people up and turn every conversation into a real estate conversation and 30-second commercials, all this kind of stuff. So I tried that. I went to the Chamber of Commerce, BNI, Toastmasters, wherever they let me in the door, and talked to a bunch of people and raised absolutely no capital. 2020 hindsight, it's pretty obvious why not. I was so desperate and needy. It was oozing out of every pore in my body. So I was really running out of time. And then I came up with what I thought was a brilliant idea. I thought to myself, hey, this is a good deal. The way I've structured it, it's going to be like a no-brainer for somebody. If enough people see this deal, it's going to sell itself. So I put together a list of a couple of hundred people, which was kind of smart. But then I did something very dumb and I just spammed them all with my deal. And I can remember this very vividly, Brian, because it was Wednesday. I had to have the money by Friday. And I sent this sucker out and I went to bed Wednesday night and I got up Thursday morning and I was so happy initially because I had a number of responses come back to this email. I'd sent it out to a couple hundred people. I was happy until I started reading the responses and they pretty much all said, "Hey, Dave, I haven't heard from you in a long time. And here you are hitting me up for cash for a deal. Take a hike." One guy, Brian, had not heard from me in 18 years. And that was the first thing that came across his inbox from me was, "Hey, it's Dave. I got a deal. Have you got any dough?" So that didn't work. I ended up having to back out of that deal, which was really unfortunate because I'd crunched the numbers. I was going to make a nice little profit on this deal in about 2 years. My investors were going to make a nice profit. Worst of all, I live in a fairly small town. So I ticked off the seller big time because I tied up his property for 2 weeks, ticked off my realtor, his realtor, the mortgage broker. And worst of all, I had a tenant already lined up for this property who had given notice where they were living before, right? So it was just a complete, what storm. And when the smoke cleared and I sat back, I said, that sucks. I don't want to go through that again. And I gave my head a shake and I said, "Dave, you've got a background in marketing. Why don't you apply some of the smart marketing stuff to raising capital? And instead of waiting until you got a deal on the go, why don't you get your investors lined up first and then go looking for deals?" So that's become my new mantra. When it comes to the money of the deal, the money comes first, then we go looking for the deals. And I came up with this marketing system, this capital marketing system that I call the Money Partner Formula. Worked really well for me when I was doing those single family home deals, raised just under $1 million for that. Then I got up into getting into multifamily properties, raised several millions of dollars for the deals that I've been involved in. But more importantly, over the last 7 or 8 years now, I've helped hundreds of our clients cumulatively raise well over $300 million for their deals following the same process.
And I appreciate what you said about why one of the reasons people would not give you money was because desperation was pouring out of you. And I think that a lot of people can identify and relate with that because we've all had those deals where if we just had that $85,000 or that $1 million or whatever it might be, we could all really make a lot of money, but it's convincing other people and getting them on board who might want to invest alongside of us. So looking back at all those mistakes you made, what would you say to yourself if that was a different person about how you should do it right?
We show people how to get started on the right foot so they can raise their first 6 figures, 100 grand or more, literally in a matter of weeks, and even 7 figures in a matter of months if they follow this process. So the first thing to really focus on is to have a clear idea of who your target group of prospective investors is, right? Who are these people? And the big mistake I saw a lot of newbie capital raisers making unknowingly is they think everybody and anybody with a pulse and a checkbook could be an investor. So they go out and they start advertising their deals on Facebook and social media and all over the place and, kind of doing a shotgun approach. And that's a mistake for 2 reasons. Reason number 1 is we got to keep in mind, especially when we're first starting to raise capital, the only people that are going to invest with you are those folks who already know you, like you, and trust you, right? Those 3 things have to be in place for somebody to invest $50 or $75 or $100,000 in you and your deal. If we're going out to strangers, they don't know you, they don't like you, they certainly don't trust you with their money, so you're starting from scratch. That's the big challenge, number 1. Second challenge is legalities. And just a quick time out here. I'm not a securities specialist. I'm not a securities lawyer. I'm a marketer and a real estate guy. I'm sharing my understanding of things, right? But according to the Securities and Exchange Commission and the good old US of A, and I'm up here in Canada, we've got our own version of that. It's illegal for us as mom and pops to raise capital from the general public unless we're licensed to do so, or unless we're set up with a certain corporate structure or exemptions to do so, which quite frankly, tend to be very expensive and cumbersome, especially for folks that are doing smaller deals or just getting started with raising capital. So what we want to do instead, Brian, is we want to create a group, a target group of approximately 200 people that we already have a relationship with. So in other words, let's focus on people who are in your network first, and let's shake the tree there. And what we find is typically there's somewhere in the range of $1.5 to $2 million worth of capital available from your existing network already before you have to start thinking outside of it.
I'm glad you brought up the SEC. There are specific rules and regulations that one must follow when raising money because you don't want to get in trouble. Building up that list, friends, family, people in your network who do know and like and trust you. What are some of the strategies to do that? Add people to your list.
To create this list, it sounds very daunting to think up 200 people, doesn't it, Brian? I mean, I couldn't think up 200 people off the top of my head. So what we do instead is we start with a much bigger group and quickly whittle it down to 200 people. So what do I mean by that? Chances are you and all of your viewers and listeners have one of these things, and I'm holding up a cell phone, right? So we start with this, export all of your contacts from your cell phone, get them into an Excel spreadsheet. Export all of your contacts from your email provider, whatever email system you're using, if you're Gmail or Hotmail or whatever one it is that you've got, or you've got a variety of them, get all of your email contacts into that spreadsheet. Same thing with all your social media contacts. Get them out of there into that spreadsheet. And now, instead of having to think up 200 people, and chances are you might have a couple of thousand people in there, and you quickly go through that list and you whittle it down to 200 people. Does that make sense, Brian? So much easier than trying to think up 200 people. And here's the criteria. When you go through that list, take a look at the name. If a face pops into your mind and you've got a generally warm feeling about that person, keep them. If you see a name, you've got no clue who that person is or what they look like, delete them, right? So very, very quickly, you can whittle that down to a manageable number of contacts that you actually have a legitimate connection with.
How do we communicate with these people when we have an opportunity? Are there things that we say that might throw up red flags and turn them off, maybe show them that we have a certain amount of desperation? But then there are other ways to do it where we exhibit more confidence in a way that people really feel compelled to want to invest with us. So how do you go about it?
The first thing I do is I don't talk about real estate right off the get-go, right? So you remember my painful story. I spammed everybody I knew with my deal. I don't want you to do that. That's just clumsy. It turns people off justifiably, right? And here's the worst part of that whole story I told you before, Brian, was not so much I didn't raise the capital. It's how many people I turned off by being so clumsy about it. So here's what we want to do instead, Brian. We've got that list of 200 people. Let's wave the magic wand. You got that list. Let's start off by connecting with those people on a personal level first and setting the stage for the real estate conversation that comes down the road. So the good news is technology can do all the heavy lifting for you. You don't have to pick up the phone and call 200 people or set up 200 coffee meetings. What we do with our clients is we set up a simple 3 email sequence that goes out Monday, Wednesday, Friday. The first two messages are just all warm and fuzzy about, hey, it's, for example, hey, it's Dave. Chances are it's been a while since we connected. Just want to reach out, see how you're doing, hopefully get connected with you, let you know what I've been up to for the last little while. And then I do a quick little recap of what's been going on in my life over the last 3, 4, 5 years. I just assume the other person has been out of contact with me for a while, and I catch them up, what's going on with the kids, with the wife, trips we've taken, a little bit about work, good stuff, the not so good stuff, what happened in COVID, all that kind of stuff. So we do a nice little synopsis of what we've been up to. And then at the end, we say, hey, well, that's enough about me. How about you? Brian, how are you doing? Please hit reply to this email. I'd love to catch up. Use the technology, CRM system, email autoresponder, send that out personalized to all 200 people on our list. And then we respond to their replies. When people get back to us, we have a genuine connection. So we use the technology to send this out en masse, but we legitimately answer people when they reply back to us.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. What you're describing is the way that you're bringing people into your ecosystem, getting them onto your investor list.
We've already got the list, right? We've created that database, that list of 200 people. Now we're just connecting with them and warming them up before we start talking opportunities. Does that make sense? We're setting the stage.
Do you have an opportunity at that point that you're teeing up to talk about?
My philosophy is when it comes to the money of the deal, ideally, get your investor ducks in a row first and then go looking for the deals. Or at the very minimum, be doing both at the same time, right? Because the worst time to go to the bank for a loan, the worst time to go to investors for money is when you desperately need it, right? Because
then in that follow-up conversation, how does that go? What are you talking about? Are you talking about the idea of investing in general, or are you talking about a specific opportunity?
So here's what I always recommend. I recommend that our marketing be focused on creating curiosity and getting people to reach out to us to book a call, to book a conversation, right? To book a meeting. So what do we talk about in the marketing? We talk about why real estate is such a great investment class versus everything and anything else. Why we like to focus on, for example, multifamily properties, why we invest in this particular market. But we keep it pretty general. We're not pitching any specific deal. We're creating curiosity and we're getting people to reach out to us for more information. So the job of our marketing is not to sell a deal. The job of our marketing is to sell a meeting.
Let's skip ahead to when you actually do have an opportunity. How do you tee that up to bring it out to investors as an opportunity that they might want to invest in?
So by that point, hopefully, if you've followed the process, now you've had a bunch of investor meetings. You've gotten a number of people to give you what I call warm commitments, right? Some people call them soft commitments. There's soft, there's warm commitments means, in my case, that they've signed off on an expression of interest or a letter of intent. So I know that they're serious about investing. So ideally, depending on the size of deals you're doing, you've got 2 or 3 or 4 or 5 people who've already put up their hand and said, hey, Brian, when you've got a deal, I want first dibs. And then when I've got that deal ready to go, then I go to that small group and I say, hey, you guys, here's what I've got. And perhaps I do a short little webinar for them, get that group together on Zoom, walk them through the deal and kind of go first come, first serve type thing. So jump on if you'd like this. Other clients of ours, what they do is they'll put together a little investor package about that particular deal, but they don't send that out to their entire list. They focus on the people that have already put up their hand and who've already made that warm commitment.
What specifically do you say when you put it out there? Do you have a one-liner? Do you say, hey, I've got our investment, let's go? I mean, how do you present that?
There's all sorts of ways you can do that. I mean, it depends on how you're going to be doing it. But yeah, an email subject line is pretty important. But at this point, I mean, if you've got 5 or 6 people lined up, you'd probably do a couple of different things. So the first thing you do is send out a quick little email. Hey, I got a hot one on the go, right? Send that out. People are going to people are going to open that up and then they click on the link and book a call with you one-on-one to discuss it or join you on the webinar. Or this is the point where you can actually be calling people up because you're not cold calling. I'd be calling you up and saying, hey, Brian, remember a month and a half ago, we had that conversation and you wanted first dibs on my next deal. Well, I've got one. Would you like to take a look and see what it looks like? So it's very easy to have that conversation.
What is the investor profile? I mean, you kind of talked about looking at everyone on your email and contact list and then culling it down to a select 200. What exactly are you looking for in your investor at that point?
With that list of 200 people, it's fairly broad because here's the thing I've found out over the years, Brian, and let me know if this has been your experience. Sometimes the people that we expect would be investors are all flash and they don't have much cash. Okay. And other times, people that we think would not become investors or joint venture partners actually do have a lot more capital than we thought they do, or they're connected with people who have capital. So we don't want to make too many assumptions there with that core group of 200. Again, I'm talking about when we're first getting started with raising capital. So we keep that fairly open. And to a certain extent, people are going to self-select. Like if they're really not interested in real estate, they're really not interested in your deals, they're going to click unsubscribe and take themselves off your list anyhow.
You're in Canada. Do you look at things like, are they high net worth investors? Are they accredited investors? Are there specific qualifications you have to look at?
That's the purpose of having that meeting. And again, it depends on what kind of deals you're going to be doing, Brian. So for example, a lot of our clients are not so much bringing on investors or syndications or things like that. They're bringing on joint venture partners, right? So somebody's coming on board with the capital and the credit, and they're going to be a little bit more active in the deal. So they're more like a joint venture partner. Or, some of our clients in the States, the way they're set up might be something like a 506B, B for buddies, where they are able to bring on friends and family into those kind of deals. So again, that's the importance of having those one-on-one meetings with people to get them lined up as those investor ducks in a row.
So far, we've talked about the conversations you have, either over the phone or by email. But what are you actually preparing to show them about the opportunity? Do you do a pitch deck? Basically, what do you do? How do they know what they're even investing in?
We call it our $1 Million Investor Presentation. So when we're doing all of our marketing to get that curiosity, to get people to book a meeting with us, that's what we're going to be walking them through. We're going to be walking them through this $1 Million Investor Presentation. And that is like, some people call it a pitch deck. A slideshow presentation tends to work best. That way you can use this one-on-one at a coffee shop meeting, or you can jump on Zoom like you and I are doing right now and share your screen and walk people through it that way. Very, very effective. So yeah, a good presentation. Now, we have kind of different presentations depending on what we're doing. So this general presentation is kind of big picture. And we got to remember, because here's a big mistake I see a lot of people making with their pitch decks and their presentations, is, Brian, you and I and your followers are what I lovingly and affectionately refer to as real estate weirdos or real estate nerds, right? We're into this stuff. The average person is not. The average person does not understand all the jargon. The average person is not super analytical. They don't really want to see tons of graphs and charts and data and all this kind of stuff that we love to show them. So we got to keep that in mind with our presentation and walk them through big picture, always keeping in mind that we want to reach them at their level, because if we talk over their heads, we might think we sound smart, but if they feel stupid, they won't want to invest with us.
That's kind of one of the things I see a lot of syndicators doing, is making the mistake of using all the jargon, all the words that you and I understand. But the average investor, even the average high net worth and quite often ultra high net worth investors don't understand.
Plus, they don't really want to think that hard. I mean, even if they do understand, it doesn't mean we need to do it that way. So it's not that our investors are dumb. Whatever their area of focus in, they're probably very, very intelligent people. However, we are the real estate experts. So it's kind of like if you've ever been to a doctor and the doctor rolls out the Latin and all this medical terminology and all this kind of stuff that goes over your head. How helpful is the doctor being? They sound smart, but they're not helping us, right? So we need to make sure that we communicate with people at their level.
Dave, I come from a marketing background as well. And, It is always simple, simple, simple. And if you think it's simple enough for people to understand, make it even simpler because they don't understand it.
I don't know if you remember, it's like the Reader's Digest analogy. And this is definitely dating me, but back when I was a kid, I can remember everybody got the Reader's Digest little magazine, right? And this was a magazine written for grownups. However, it was written at a 13-year-old reading level. So that meant that any average 13-year-old could pick up that little magazine and understand everything in it very easily. So that's the same idea, the same philosophy I have for the marketing. Let's keep it super simple so that an average 13-year-old could understand what it's all about. Then we know that we're on track.
So Dave, what are some of the top recommendations you have for our listeners when it comes to raising capital? Like if you could identify the top 3 rules that you have, what are they?
First thing is, don't wait until you got a deal on the go to start raising capital like I did back in the day. So ideally, start raising capital, getting your investors on board before you actually need it. So that'd be number 1. Number 2 would be who you focus on. Create that target group of your prospective investors, that what we call your Dream 200 list, and focus on your existing network first. Chances are there's somewhere between $1.5 to $2 million worth of capital available to you right there. And then the third thing is, don't charge in with just trying to raise money right off the get-go. Warm people up first, get that reconnection first, set the stage, and then you start the conversation. Then you start the marketing, what I call your constant, consistent, edutaining communication, remembering that the purpose of your marketing is not to sell the deal, it's to get people to book a meeting with you.
What is your favorite hack or app that you use in your business regularly?
Zoom. It really is. My goodness. I can't even imagine doing business without Zoom anymore. I do a podcast. We use Zoom for that. I meet with with investors via Zoom, meet with our clients via Zoom, meet with my team, my virtual team via Zoom. I don't even remember how we did business before Zoom.
Tell our listeners how they can get a hold of you, find out more about you, and please, again, plug your podcast and anything else that you would like to mention.
Again, very excited about the new podcast. Again, that's called the How to Raise Capital 101 Show. You can find that anywhere you like to listen to podcasts, or we got a website for that as well, raisecapital101show.com. And here's the cool thing, Brian. The first 9 episodes of the show are a mini course on my entire 9-step money partner formula. So you can go check that out. There's no opt-in required. You just listen to them and you'll get the full scoop on exactly what we were talking about here today.
Dave, thanks so much for coming on the show today and sharing your tips on how to raise money and sharing some examples in the early days of how not to raise money. It's been a real pleasure talking with you. Thank you so much.
You're welcome. Thank you, Brian.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.